Good evening, guys. It's Saturday, April 13th. My name is Dave Coker, and this is Talking About Finance. And you know, this is the best part of my week. I get to speak with people who genuinely want to get rich. People that realize what's popular isn't always right. People who realize what's popular may be popular for reasons that aren't in their best interests. Let's talk about a common investment strategy, often pushed by those who are new to the markets. Stock market indices. But stock market indexes, dollar cost averaging into stock market indexes, isn't really appropriate for many reasons. These noobs claim it's the best way to invest, and they have lots and lots of reasons why. This approach is better than others. But they neglect to point out when you retire, when you stop investing, all you have is a bunch of stock. It's just sitting there. It ain't doing anything for you. When you want some money, you got to sell some shares. Yeah, that's great. When you want some money and you sell some shares, you better hope the market isn't going through a rough patch. Because if it is going through a rough patch, and if you sell, you may be selling shares at a loss. Yeah, that's great. And how long will the market stay in its rough patch? Nobody knows. And yeah, that's great. Even if there's not a rough patch, will any growth in share prices outweigh what you withdraw? Nobody knows. Yeah, that's great. The list of negatives associated with this type of investing is pretty long. The list of negatives ignores the fundamental fact that you need money to live on, which is why you invested in the first place. So look at dividend investing. Look at dividend and investing for cash flow. It's not popular, but it is better, far better than simple, mindless index investing. So now let's talk about finance. The S&P 500 finished down 1.56% on the week. All 11 sectors booked losses, with 6 sectors booking larger losses than the S&P 500, and materials and financials coming in last. Another 5 sectors booked losses, but smaller losses than the benchmark S&P 500. Technology showed the smallest loss on the week, but still, it lost about 50 basis points. The VIX traded up on the week to 17.31. It started the week at 16.03. The 10-year note closed the week at 4.52%, up 0.1% and up 0.6% year to date. And we're still seeing risk-free yields climbing across the yield curve. So watch that. Remember, as these yields go higher, they're risk-free, so they're far more attractive than risky stocks, which of late have been declining. Oil closed the week at 85.51, down about 1.6% on the week, and up about 19% year to date. And of course this week I bought Bitcoin. What else am I going to do? You know, I've been doing it for almost 10 years. I actually had another surprise distribution of cash, some more royalties. I'm pretty amazed at how popular some of my articles are getting. And so I bought Bitcoin twice this week. And now we're at less than 1 week, 6 days exactly, or roughly, before the halving. So again, guys, just buy, and buy regularly. Remember, Bitcoin might trade sideways, Bitcoin might drop, or Bitcoin might go up after the halving. We're not totally sure. We just know over a long enough period of time, Bitcoin does go up. So let's see what me and my buddies, some 50 or so finance professionals from all around the planet, talked about last week. And let me introduce us. We are Global Wall Street. And between Telegram and our personal networks on LinkedIn and WhatsApp, we know everyone. I'm totally stunned sometimes because we know absolutely everybody in global finance. And this week we're reporting from Wall Street. We're reporting from Canary Wharf. We're reporting from Shanghai. We're reporting from Hong Kong. And we're also reporting from Buenos Aires. We have people everywhere. Absolutely everywhere that matters. 7 slides for 7 goes. Whoa, 7 slides for 7 days. Sorry about that, right? Okay, here we go. Come here. We're going to do this thing. We're going to make some money. Oh, yeah. So interesting, guys, when we start to talk about stocks, look at this. This is off some crisp data that I got my hands on and through Goldman Sachs research. And what they're doing is they're taking a look at the ratio, the market cap ratio of the largest stock compared to the 75th percentile. And we're in sort of dangerous territory here, well above what happened when the great crash occurred. It's really fascinating that people are still buying stocks like there's no other investment. I'm totally stunned that people haven't been putting money into metals, that people are not purchasing fixed income. And I wrote an article, you can find it on the internet, where I track retail fund flows. Yeah, it's strange what's going on with the retail investor at this point, but it doesn't really matter. We're here and we're going to be doing okay. And speaking of investing in the markets and stuff, now this is a really interesting one, guys, because when you take a look at what's going on with the markets overall, really amazing when you take a look at what's happened with prices. S&P 500 up some 76%, gold up 84%, and silver up 89%. This is all since March 1st, 2019, when I moved 71% of my retirement capital into gold and silver. Absolutely incredible. We've never seen a 5-year period like this where metals beat gold. I wrote an article about it. You can find it on the internet. I wrote it last week. I wrote it really quickly on the train. I was just stunned to see this relationship. I went back and crunched the numbers when I got home. I've got a fairly big Mac here. And I went home and crunched the numbers. There's not a single 5-year period since the end of World War II where metals, precious metals, commodity metals, silver and gold, outperformed the S&P 500. There's been 3-month periods and one even 5-month period, but never a 5-year period. Something weird is going on in the markets. There's very little doubt about that. Oh, and over the same period of time, I do have to bring this up. I am so sorry, but I won't really apologize because I own a lot of Bitcoin. And Bitcoin up 1,222% over the same 5-year period. So hopefully you've been buying metals, hopefully you've been buying Bitcoin, and hopefully you're not investing in stock market indexes. Now, gold is interesting. And this is not really my stuff. It's off of Zero Hedge. But we know that one of the big stores in the States, Costco, is actually starting to sell gold. They started about 10 months ago, I believe, and now they've just tracked up to 200 million in gold bars. Really, really wild that they're selling that much. 200 million per month. Really wild when you think about it, because this is not a store frequently frequented by high-income elites, although I know some fairly wealthy people in the States. They shop there as well. But we do pick up, or this store does pick up a lot of traffic from people that are sort of cost-conscious. And they need to ramp up and buy stuff in volume, which I do myself. I buy, well, we don't have fresh milk in the house. We have milk powder. And I tend to buy the Swiss milk powder, not in 400-gram tins, not in 900-gram tins, which they'll sell me, but I buy them in 2.5-kilogram tins. Not that we use that much. We don't go through it like in a month or something like that. In fact, it lasts about 4 months. It's just cheaper. My God, it's like 2/3 of the cost, or even a little bit less than if I buy the 400s. So it's really interesting that Costco is selling so much gold. And it might get down to something like this. Now, this is not mine. This is a meme. And somebody crunched the numbers. These are 1 kilogram gold bars. So now these are not 1 ounce. And I don't buy 1 ounce either. I typically buy the 1/10 of an ounce coins. But these are not 1 ounce bars. These are 1 kilogram. And if you look at the cost of an average home in 1929 and the price of gold back then, yeah, you could buy the average home in 1929 with 10 of those bars. Over here on the right-hand side, 10 of these bars will buy an average home in 2024. That sort of tells you something, doesn't it, about the US dollar. And I've written many articles, you can find them on the internet. The US dollar is being devalued. They're printing money with wild abandon. Just a couple weeks ago, they printed another $1.2 trillion. The bill was approved at 2 a.m. on Mr. Biden's desk. Immediately, he signed it into law before lunchtime, I believe it was. Absolutely incredible. Yeah, there's a lot of inflation in the States. It's terrible what's going on back there. I really feel sorry for people of modest means that are caught up in that, because Middle income, upper middle income, and upper class people, upper income people won't be affected as much. They'll grumble, they won't like it. But if you look at the lower income people, God bless them. It's a choice between eating or heating, perhaps. It's a choice between when they eat. Does everybody in the family eat a meal, or do they give it to the kids? This is the reality. And still, you get the media. Now, I admit I do subscribe to Wall Street Journal. Not all their stuff is this crazy, and this is pretty crazy, because when you look at the data, and they should know better, when you look at the data, sure, it doesn't half look bad. But when you look at the cost of actually buying stuff and doing things, it's pretty darn expensive. And this is the kind of stuff, this is the type of mentality or headlines that the people who write this stuff they have the mentality of just pointing fingers and saying everything's okay. They lose credibility, and I purposely remove the reporter's name there because not everything they write is garbage like this. I don't really know why they wrote it. I don't really care. I don't believe it. And I know a lot of people in the States don't believe it either. But still, there are ways to protect your wealth. And we talk enough about Bitcoin in this, and I write a lot of articles about Bitcoin. And we know that a catalyst for the Bitcoin bull market will be the ETFs, the exchange traded funds. Not only the halving, which typically kicks one off, but also the exchange traded funds. Now, it took the SEC, and I wrote an article, you can find it, over a year of just finagling and garbage to finally approve these things. Well, guess what? The Chinese, God bless them, wonderful people, they move quick. Hong Kong, they started talking about Bitcoin ETFs about 2 weeks ago. They're advertising them already because they're going to be launched or rumored to be launched Monday. But this was sent out, this is not sent in. This is the Hong Kong, I don't think it's subway, I don't know what they call it over there, transport, I have no idea. But when you go to take a train in Hong Kong, this is what you see now. This just popped up Friday. Absolutely incredible. They move very quickly. I like it. And finally, when we take a look at Plan B's work, and again, a lot of time for this guy. If you don't follow him on Twitter, definitely check him out. Plan B, of course, has done the stock to flow model, and he's refined it since, and this is his market cycle model. And here what we're doing is, if you look at the extreme right of the chart, we're moving into a bull market. We just finished the accumulation phase. I hope you bought heavily during that phase. I did from the last bull. Well, actually, I've been buying for many of these cycles, but I just buy all the time. I don't try to time it and look at stuff like this. Although this is excellent work, don't get me wrong. But my approach is just I got to have something to do with my time and money. So I buy Bitcoin once a week. As you guys know, I've been buying it every Friday for years, switched to Thursdays about 3 weeks ago. Oh, and I happened to buy Bitcoin Thursday and Friday this week. I was surprised to see the royalties come in. I was like, oh God, what do I do with this money? And then the answer, of course, is, well, you're not going to spend it. I never spend money. And I have enough liquidity. Don't want to buy stocks. Really overvalued right now. Haven't bought stocks for about a year now. So yeah, pour it into Bitcoin, a little bit more Bitcoin. But yeah, we're in the red phase, which means we should be in a full-on bull market. I'm writing an article about it. You can find it. Next couple days it'll be published. Look on the internet. And yeah, bull markets, prices go up, and we're much, much happier. I won't get into level estimates for this cycle. Some people are pretty up there, really up there. I'm not going to even repeat them. Just go take a look. It's pretty amazing when you look at some of these forecasts, how high they think Bitcoin's going to go. I'm quite happy if it just tends to drift up because I've been buying it for almost 10 years, guys. Yeah, my portfolio is profitable. But if you haven't started buying Bitcoin, there's no time like the present to start. All right, guys, that's it for this evening. Thank you so much for your time. You're going to have a wonderful and profitable week coming up. It's going to be excellent. I just wrote an article on investing. I wrote an article on process-driven investing. Check it out. You can find it on the internet. Take care, guys.